Hello, thanks for your interest on about audit materiality. In our audit presentation, we will discuss on about the Institute of Chartered Accountants in England and the world's learning materials. On this you can see below this link that offering resources on worldwide support to implement ISAs and IFRSs. Really appreciate their effort in this section. While we start learning on about the materiality, should take into account that this presentation does not address all specific local requirements that jurisdiction may have in place. Guide will help audit firms and interested bodies better understand and appropriately apply audit materiality. By ISAs, for example, of course. We hope that the guidance will helpful to provide auditors in different jurisdictions. Let's start. What is a materiality and why it is so important in audit? Base requirements of ISA 200, overall objects of independence audit, clarifies that the audit purpose is to enhance a degree of confidence intended users. I want to emphasize the intended users because this is the key term and they have a high influence whenever make your judgment. ISA 200 paragraph 3 as the basis of the auditor's opinion. ISAs therefore require to obtain reasonably assurance about whether the financial statements as a whole are free from misstatements as due fraud or error. Fraud and error also are the case of ISA, also IFRSs. Also, ISA 200 paragraph 6 explained that the misstatements, including omissions as well as considered the material if individually or aggregated, they could reasonably be expected to influence decisions of users taken on the basis of the financial statements. In the other word, according to ISA, judgment on about the materiality are made in light of audit claims surrounding circumstances. They are affected by auditor's perception of financial information, needs of users' financial statements, and by the size or nature or even both of misstatements. In the other word, misstatements have two characters, two indicators. Size is related to quantitative character and nature is related to qualitative character. Materiality is applied by auditors at the planning stage at first. Second is when performing audit. It means when audit team make audit procedures, subsequent events, testing, control system reviewing, and etc. etc. We will explain this in below. And at last, evaluating effects of identified misstatements on the audit and of uncorrected misstatements. Here we have many tips. While auditor determine the materiality at the planning stage, auditor should consider and should be mindful that the circumstances may change during the audit, or some of the audit findings may mean that the assessment should be reassessed again. ISAs are set out methodically with following sections: introduction, objective, definition, requirements, application, and other explanatory materials. In the contents, all ISAs have same breakdown. By the way, application and other explanatory material, it's very important whenever you want to get in practice the standards. However, ISA 320 Materiality in Planning and Performing an Audit does not include a definition of materiality. Perhaps the most important reason why materiality is not defined in the ISA is because the principle of materiality is first and foremost a financial reporting rather than an audit concept. Also, the interpretation may differ in different parts of the world. Materiality application is explained in IAS 8 Accounting Policy, also by IASB issued Practical Statement 2 Making Materiality Judgment, which widely exposes materiality concept in financial reporting. This professional statement link is a comment section and you can see. The ISA does, however, highlight some keywords and phrases in relation to materiality in the context of the audit, which includes first misstatement, including omissions also, which could influence decisions of users of financial statements. Second, judgment. This is used when there is no one single answer based on surrounding circumstances, including the size and the nature of the misstatements. Given this characteristic, to condense materiality, it means to express materiality by one number. May seem impossible, albeit sometimes supplemented with lower levels for individual balances, class of transaction and disclosures. Actually, they needs their own materiality. However, the standards requires it, and there is a good reasons in particular to do so. Here summarize the ISA requirements on materiality. The requirements will cover in our video courses. First, determine the overall materiality. Second, determine performance materiality. Third, determine lower special materiality. Fourth, determine clearly trivial threshold. Fifth, group audit in determine components materiality. Sixth, accumulate misstatements. Eighth, evaluate misstatements based on size and nature. Eighth, reassess the overall materiality. Ninth, communicate with those charged with governance. These 9 requirements we will discuss in below, most of them precisely, and I want to observe one consideration. These requirements are sequenced by hierarchy, which is the first stage, second stage, third stage, and at last communicate with those charged with governance. And it was not over. Also, here is supplemented requirements about documentation, materiality, and evaluate of misstatements. In these 2 sections needs some document conducted. We will discuss all these items below. It's very interesting requirements.